Thank you, Funeka. I am David Hodnett, responsible for our business and commercial segment. Today, I'm going to focus on 4 agenda items, starting with who we are and our progress to date, followed by our strategic focus areas and, of course, key measures of success. Across the African continent, this segment provides broad-based client solutions to a wide spectrum of small or enterprise clients through to medium-sized and commercial businesses. Our coverage support encompasses a wide range of industries and sectors, with the teams leveraging their deep insights and sector expertise grounded in years of experience. As I'll illustrate, BCC is a key integrator between the consumer and high net worth and wholesale segments. I'll now describe our current franchise position, after which I'll elaborate further on our strategic focus areas. As at June 2021, we have over 746,000 active clients. As expected, and aligned to our revenue contribution, our active customer numbers skew towards a more mature and developed South African franchise. Our estimates show that we hold a solid 20% market share in enterprise and an even stronger, greater than 25% share in business and commercial segment, placing us second in the market. This is a large contributor to our profitability and delivers a meaningful ROE to the group. Later, I'll discuss our approach to retaining and growing this space further. With 248,000 active clients, our Africa Regions franchise in 14 countries remains underweight and represents a significant opportunity, especially in the West and East regions. The BCC segment has historically focused on a transaction-led strategy, which, supported by the typically strong businesses we service, has led to low loan-to-deposit ratios across the franchise. This lends itself to a less capital-intensive business model, but introduces elevated exposure to endowment risk, specifically in the rate-cutting cycles we have recently experienced. Despite the recent economic challenges, the BCC segment has evidenced double-digit constant currency balance sheet growth. This reflects the franchise health and partially mitigates a significant endowment impact, but more importantly, highlights the growth opportunities. Whilst we remain responsive to market conditions and sector-specific dynamics, we maintain a stable risk appetite that considers a through-the-cycle risk approach. This enables our teams to support our clients through these challenging economic conditions while still facilitating their growth. It goes without saying that transactional activity is a key driver of BCC performance. In line with broader market behaviours, we've experienced a migration to digital channels across the continent. In addition to improving client experience, this also creates cost-saving opportunities. The benefit of trade and transactional flows, combined with a low loan-to-deposit ratio, allows this segment to generate strong returns. In South Africa, this segment delivered an ROE in excess of 20% in severely challenging economic conditions and a low-rate environment. We are well positioned to benefit from future interest rate increases and trade transactional flows, supporting our expectations of a higher, more normalized ROE in the medium term. In our Africa regions, we continue to focus on building scale. While the Africa region's ROE is still below expectations in many countries, ROEs already exceed the group's cost of equity. The unsatisfactory ROE in our East region is driven by endowment impacts and elevated credit losses, alongside insufficient scale. Returns will continue to improve as we drive customer acquisition and trade-related revenue. As a key differentiator, we have focused on strengthening frontline capabilities to enhance the client servicing and deliver improved client solutions. The key interventions that have helped us grow and deliver on our client promise are focusing on providing tools to assist our frontline teams in their customer engagements. By understanding their full financial exposure, key needs, and future opportunities, these tools have enabled our teams to proactively engage on a very personalized basis with our clients. Success is evidenced through our improved customer experience and a double-digit uplift in our conversion rates. The trade opportunity, where we have seen double-digit growth supported by our in-house trade solutions and, importantly, our unique ability to leverage our deep connection with ICBC. Recognizing the importance of smaller businesses, together with the required investment and solution development to service this market, solutions have been introduced to support the growth of our clients, improve their experience, and drive up client activity. These include a virtual banking relationship, the introduction of e-commerce solutions such as Simply Blue, as well as the launch of a flexible cash flow linked lending and low-cost transactional product, alongside our digital KYC capability. Improving our digitized lending through alternative scoring methods, and the recent relaunch of the BizConnect platform, which supports entrepreneurs with starting, growing, and managing a business. Pleasingly, the platform has already experienced more than 27,000 visits, reflective of the strong business demand for advisory support. In collaboration with other segments, we continue to mine our client value chains. This is delivered through solving client ecosystem pain points and driving quality customer relationships. We have identified more than 2 million opportunities, of which we have already converted 5%. Lastly, we have successfully partnered with other innovative companies to support our strategic direction, deliver optimal client solutions, and drive our clients' growth. These partnerships include, but are not limited to, Founders Factory, Merchant Capital, Cloud Badger, and Nominini. I'll unpack these a little later. Looking ahead, BCC intends to move beyond just being a service provider. We aim to be a lifetime partner, integrating into our client business journeys and ecosystems, where it matters and when it matters. To achieve this, we continue to migrate towards a platform-based business model that provides holistic client solutions. Our existing strengths lie within our people, footprint, existing client relationships, broad-based solutions, deep sectoral insights, and partnerships. To this end, we have identified the following 5 strategic focus areas: retaining and growing our existing foothold in South Africa, dominating the trade market, supporting and growing the enterprise segment, partnering to drive growth, and the development of key platforms supported by our ecosystem experience and deep customer knowledge. Underpinning each of these areas is our deep sector focus and experience, and a proven through-the-cycle risk approach with the ability to adjust for specific economic, geographic, and sector dynamics. Executing on and digitizing our solutions will be accomplished in conjunction with our external partners, client solutions, and engineering. I'll now briefly describe each of these areas. Our South African franchise has a strong market presence and delivers a meaningful contribution to the group. This is a sought-after segment of the market, and we recognize that competition is mounting, both from existing traditional players as well as new non-traditional competitors. We acknowledge the importance of our client relationships across both the enterprise segment and our relationship banked business and commercial segments. We pride ourselves on the personal touch and deep client relationships, alongside the ability to connect our clients to our broad-based customer network. We have further empowered these client teams with data analytics and holistic customer-facing toolsets that enable them to anticipate and address our client needs. Together with the introduction of innovative offerings, including Simply Blue and BizConnect, as well as our fleet and trade solutions, these actions will support our client growth ambitions. We will continue to collaborate with the consumer and high net worth and wholesale segments to drive expansion through our ecosystem and value chain work. In recent months, we have seen clients with turnover in excess of 20 billion rand per annum joining. Our success is illustrated through our 3% active client growth, the 29% growth in our merchant acquiring turnover, 25% growth in lending disbursement, and improving trends in our NPS scores. As noted by Sim, trade is one of our 10 identified ecosystems. To effectively support and drive Africa's growth, we need to fully connect our customers as well as automate and simplify trade. To deliver on our aspirations to dominate trade on the continent, we lead with our local relationship managers, supported by our digital solutions. Our broad African footprint, combined with our ICBC relationship, provides us with an unrivaled advantage in terms of accessing intra-regional and trade corridor flows. This underpins our trade ecosystem opportunity. Our trade solutions are key to our aspirations. Trade Club, a connectivity, networked solution where local and international suppliers are pre-vetted to assist with introductions and reliable delivery. Client feedback has been positive, with over 4,000 matches to date. Trade Suite, our managed import solution, which provides a dedicated trade specialist to enable end-to-end support through the entire journey and ensures that the correct working capital trade finance solution is implemented. We are upgrading our cross-border payment tools, which will substantially enhance the customer experience. And finally, we are also investigating opportunities to tap into logistics, which will provide further trade integration in the future. This cohesive solution set, being co-created with wholesale and providing an integrated and comprehensive trade experience, is expected to deliver an increase in trade market share and provide capital-light, non-interest revenue and deposit growth. There is a significant opportunity in the SME market. We estimate that there are more than 150 million small and medium-sized enterprises in sub-Saharan Africa. Statistics indicate that this segment contributes roughly 50% of employment and more than 40% of GDP. With less than 5% of market share of registered businesses, we are now targeting a 10% average market share, translating into a more than doubling of our active client base. In South Africa, given our already competitive position, we aspire to be number one. The introduction of the African Continental Free Trade Area is expected to increase inter-Africa exports by 50%. By harnessing and supporting the growth of this segment through our trade solutions and networks, we believe that as we partner our clients for their success, we will support Africa's development, employment, inclusion, and GDP growth. While we continue to see respectable customer growth in the enterprise segment, we have identified and are responding to the following key client demands, namely funding, protection, connectivity, advisory, servicing, and financial offerings. We have introduced new solutions and processes, including innovative, easy access lending facilities such as Trader Direct, Easy Cash, and FlexiPay. We leverage our transactional data and external non-financial data alongside artificial intelligence robotics to automate and reduce our lending turnaround times. To address client payment requirements, we have introduced low-cost digital business account, and for protection, we offer business insurance options. Our enterprise mentorship program, business resource platform, and the virtual banker relationship model provide this segment with the necessary advisory and connectivity support. These clients are serviced virtually through an experienced team of local bankers. We continue to deliver improvements to our model to ensure that 90% of all sales and services can be provided virtually. This model, already boosted by the introduction of our digital client relationship tool, Customer 360, and the heightened use of our underlying data and behavioral science models, enhances our ability to proactively engage with customers. Newer digital solution developments that are in flight include an upgrade to our South African mobile app and online solution. This will better support our SME clients' business needs. These interventions will drive existing client loyalty and future acquisitions and provide the necessary insights to support their growth and our growing share of the revenue wallet. In keeping with the group's strategy to partner to deliver optimal customer outcomes, we have already entered into partnerships with various companies that have more experience and agility in certain environments. We have highlighted 4 of these partnerships. Founders Factory is a key entrepreneur and enterprise segment growth partner which supports startup companies. In actual fact, we do not only partner with Founders Factory, but we also support the kickstart businesses within their network through active utilization of their services. For example, Triplo, FloatPays, Kudigo, and Redbird. Merchant Capital provides our flexible cash flow linked funding solution in South Africa, as well as more recently into the rest of Africa. Pleasingly, we have already disbursed more than 1 billion rand through this offering. Cloud Badger delivers a potentially disruptive Fonaya platform, which allows us to service consumers as well as traders on a low-cost, flexible, and simplified platform. It creates ease of use and reduces branch and bank dependencies. Nominini provides us with an alternative approach to consider lending and the use of non-financial data to support business lending decisions. We continue to embrace and carefully consider partnerships with relevant companies that will support the BCC strategy and our clients' needs. As the group transitions towards a platform business, BCC has identified several key focus areas. There is a significant opportunity in the trade environment where our solutions lend themselves to an integrated platform. This will not only benefit our clients in terms of our value proposition, but also provide financial benefits as the bargaining power on the platform increases. The trader solutions that service both the wholesale and retail trader environments, for example Thrive, present further opportunities that will fundamentally change traditional payment and financing models for the sector. While we're still building scale, the detailed data outputs, distribution, and stock management capabilities will be game changers for the small trader market, providing key insights on product demand and utilization for the wholesaler. Unayo, our recently launched platform, will service 4 key payment ecosystems, namely donor programs, remittances, traders, and salary payments. Already active in 3 countries and on track for further deployment, this is a no-cost digital account solution, providing a potentially compelling competitive offering in response to MVNO solutions. We have already effected more than 60,000 transactions since our launch in the first quarter of 2021. Renewable energy sources are very topical given the power challenges experienced across the continent. Our newest platform, PowerPulse, launched by the wholesale segment, will be a key enabler for our business clients. Kenny will expand on this. In the agricultural sector, our One Farm solution supports small farmers with production challenges and provides opportunities to enhance their yields and connect them to markets. The data associated with this is used to provide much-needed funding to small farmers. Lastly, we're exploring opportunities of building an advisory and digital business solutions hub aimed at connecting businesses to products, services, technology, and people, and designed to generate access to market and additional business growth. These platforms support the opportunity to capture new markets, reduce the cash footprint, and provide a lower cost to serve. They provide access to new revenue streams through enhanced data sets, new products, and ease of use capability and connectivity. We are excited about the prospects that exist for BCC across the continent. We have the combination of our existing strengths of scale, client base, products, footprint, and the ICBC relationship, together with a significant potential of growth in Africa regions, trade, and enterprise, as well as the emerging platform opportunities. In addition, we'll continue to collaborate with our other segments to mine our client ecosystems and value chains for acquisition prospects. We also see potential in the energy and agricultural sectors to support sustainable development and are working with wholesale to develop products to support our clients in this transition. We are therefore well positioned to take advantage of the key trends underpinning growth across the continent, and as a result, forecast our ROEs will return to 25 to 30% in the medium term. In conclusion, we have a robust South African business that will continue to present stable, measured growth, while Africa regions provide substantial growth opportunity. We have a clear strategy, and action plans are already well in flight to deliver on our aspirations. Thank you. I'll now hand over to Kenny.